All right, government. Let's first off add government to that circular flow model that we came with. Now, you'll go ahead, you should see this is a handout in there to go ahead and pull out. What we're going to do is, I've got all the lines in here for you. What we're going to do is we're going to explain them. Remember, like I said last time, don't just let the word be there or write something like on a yellow sticky that 3 weeks from now, you're not going to understand. If you got a question about something like this, scribble next to it and scribble something that you remember 3 weeks, 3 classes from now. Because especially if you're going into business, you're going to need to know this backwards and forwards. All right, so we left off with it looking like this. So the first thing is, what do we do with our paycheck? All right, we buy things. Hopefully, we save some money. And then, of course, before we even get our paycheck, you guessed it, Uncle Sam taxed it. So we buy things, we save things, and we pay taxes. So here's our buying. This is that consumption spending. All right, we already went over that part. But our savings, this is where the capital market gets its money from. Money that we don't spend, we should have in the capital market. And then, of course, taxes. And yep, look at that. We just brought government in here. So we do that part. Now, businesses. What does a business do with their revenue? Well, they do the same thing. They buy things, they buy goods and services, and they pay taxes, but not necessarily. So let's see what happens. That's where they're buying stuff. They're buying our resources so they can go ahead and make things. Then they have to go ahead and buy actual resources to make stuff. Now we'll get to this in a second. And then lastly, they pay taxes. But we're going to take a look. Businesses never, ever, ever, never, ever actually pay taxes. All right. Now, the government does provide us with all of these public goods and services. All right. We kind of talked about those a little bit already. So this is that public goods and services that come through. They provide roads, bridges, everything for everybody to use. They also provide what we call transfer payments. Now, transfer payments are things that, well, let me see. It's for future or past production. Okay? Future production. What if you get fired? Unemployment insurance helps you to go ahead and keeps you with enough money to barely get by until you find another job. Medicare for kids, for the poor. Workers' compensation if you get hurt at work. WIC for kids again, for health care. Now, past production. You're working all your life. Oh, you're working. You might get Social Security. To get Social Security, you have had to have worked at least 40 quarters, or in other words, 10 years. You have had to have put money into the Social Security fund for 10 straight years in order to get money out of it. Medicare. But once you do get it, you're going to have a premium, which is going to come out of your Social Security check, and you're going to have a copay. And then, of course, military pensions and other types of pensions. But in this case, military, 20 years of service, and I get money for the rest of my life. Because, yes, I am a 20-year retiree. Why do I get money for the rest of my life? Well, let's take a look. In the Navy, I worked Saturdays, Sundays, weekends, holidays, and I worked 24/7. I worked not just 8 hours a day, I worked 24 hours a day. So that's what happened. Now, to see how they decided that past production, they needed to go ahead and provide a military retiree with something, you got to take a look at what would this have cost if we were actually paying double time, time and a half, hazardous duty, and all that kind of stuff? Well, they actually had a group that they could look at, the Merchant Marine. If I was in the Merchant Marine instead of the Navy, and I was working all these hours, I would have had to have been paid around $180,000. What was I getting paid? About $30,000. All right, so there's a $150,000 gap here. Now, who in their right mind would work for this when they can work for that? Well, that's where the 20-year part came in. Because what the government said is, well, I'll tell you what, if you do this for 20 years, we'll give you money for the rest of your life. Okay? So basically, it's a bet. Uncle Sam is betting that I'm going to die before I recoup that gap. Of course, I'm betting I'm going to live a whole heck of a lot longer and make even more than that gap was there. And who knows, with all the good meds that are coming nowadays, that's a really good option. But as for past production, I would not have done this if I wasn't going to get the military pension after the fact. Right? So that's why they had to do it, because could you imagine paying 6 times the amount of money in taxes that you're paying today? Because that's what you would have had to pay, instead of paying this amount of taxes. Because remember, this money comes from tax money. It doesn't, the government doesn't make anything. So this is what we're looking at. You say, well, shucks, it's just we're making the taxes later. Yeah, see, the other part is there's not a whole lot of people that make it to 20 years. Only about 25% or so make it to the 20-year retirement. Everybody else gets out before then, so there is no military pension. So you get out of having to pay all of that extra money after 20 years of service. So it's actually a pretty good gig for both sides. But households, future production and past production. Businesses, subsidies that they get. This is a transfer payment. Subsidy adds to the revenue side. Government wants you to do something, so they're going to pay you to do it. Right? So that's the transfer payments. Future past production for something. Now, of course, the government does need to buy paper clips and everything else, and the government needs resources, people and those kind of things. So they go ahead and buy stuff from that market with, of course, our tax money. And then, of course, government does borrow money, so they have to take money out of the capital market. And businesses also borrow money. Then, of course, we have the rest of the world. We will give the rest of the world stuff as long as they pay us, or we buy stuff from them and we pay them. All right, this is the whole thing now. Make sure you understand every part of this backwards and forwards. For microeconomics, we're going to kind of take a good look as we go through this. For macroeconomics, we're going to look at each block. Right? Now, why businesses never pay taxes? This is my best part. Business, required to pay tax. Government says, we want more money. Well, remember the 6 characteristics of capitalism, right? Personal property, freedom of choice, self-interest, competition, markets, and government. They're all there. But you also have to remember, business needs to make a profit. Profit equals revenue minus cost. This just increased the cost to the business. So, the cost goes up. What's the first thing the business has done? Yep, raise prices. So they raise prices, products cost more, households buy less because we don't have unlimited money, and our standard of living drops. You go, well, wait a minute, that doesn't sound right. But think about it, it does. If our incomes don't continue to raise, but taxes are more, say we get a 5% raise for the year, we go, yay! Taxes are 6%. Increased on the business has to increase that price. So all of a sudden, our 3% income raise might get lost in all this. But this is what we normally see. What we don't see is the other side. Because if we can't increase revenues, raising prices to cover that increased taxes, because remember, we just can't raise the prices all the way up because the law of demand says prices go up, demand goes down, so they're going to be buying less. So we can't put it all there. What we do is we lower our costs. So we're going to raise revenue a little bit, we're also going to lower costs a little bit. But our costs, what are they? Yeah, remember? Land, labor, capital, and entrepreneurial ability. Let's just look at labor. All of a sudden, promotions are frozen. Bonuses are frozen. Raises are frozen. No more overtime. And full employment jobs go to part-time jobs. We don't see this, but it happens. It might not happen to us, but it might happen to Uncle Joe, Aunt Mary. Right? But it happens. We only hear about it when people get fired. And we don't hear about, the ones or twos or the 10s or 20s. We hear when 1,500 people are laid off. Notice we didn't say fired, but laid off is an easier term for saying you were fired. So we take a look at this part, and that's the first time when there's mega firings that we'll hear about this change due to more taxes. So whatever it is, all that stuff, it reduces businesses purchasing resources, which means it lowers income. With less income, standard of living drops. So let's take a look at the next part though. They're not hiring. No job opportunities. All of you that want to go ahead and get a job after college, not available. So you can't buy the stuff you thought you were going to buy. You're going to have less income than you thought you were going to have. Your standard of living is going to be below what you thought it was going to be. Then, of course, reducing dividends. All right, remember, businesses also supply us with an opportunity to invest money so we can go ahead and retire comfortably, or buy that house, or send the kids to college. All right? Investments. They reduce the dividends. So all of a sudden, say you're an investor and you're not getting as much money as you thought you were going to get from that company. Well, now maybe you take that money and move it to another company. You sell their stock and buy somebody else's stock. Or your stock manager does it, or your mutual fund does it without you even knowing about it. But what happens is all of a sudden that company doesn't have as much money as they did before, and guess what? They have to go ahead and reduce their costs even more. As we reduce those costs, it reduces what we can purchase, which gives us less income, in this case less income in the future, drops our standard of living. So in any case, whether it's raising prices or reducing costs, they have to make a profit. Now the initial check coming this way may be from the business, and it may take time to recoup those taxes from reducing or increasing prices and reducing costs, but it will happen because they have to make that profit. So when you hear government say we're going to raise the business tax, just remember, ultimately, we pay every tax the government puts on anything. This is why it's so important to understand economics, and in this particular concept, the circular flow diagram, so you can see how this works. Now, yeah. Government, however, will go ahead and try to nudge us to think that this is a good stuff. And this is where our next paper comes in, nudging. And I'll get to that at the end of the next segment.